Hey guys, welcome to another webinar. And today we're going to be looking into some assets and how they're most likely going to react in this coming week. So I've gone ahead, to look at the COT report. If you're new here, welcome. This is for educational purposes only. If you need expert advice in regards to how to trade, consult with a professional. And that disclaimer has to be said before going on. So if you're new here, welcome. What we do is we use a three-base strategy, which is the COT report, which is the commitment of traders report. We go to seasonality, and then we go to probability. And what the COT report, what it looks like, actually, it's this. It looks like something like this, right? It shows non-commercial, commercials, non-reportable. And who we focus on are commercials. The reason why is these guys do not look to make money in the market. They don't care about making money in the market. They use it for their normal day-to-day transactions or their normal day-to-day running of their business. So if they need specific funds, for example, New Zealand dollars in New Zealand, and they're from China, they have to convert the Chinese yuan to New Zealand dollars. And hence why we follow them, because they always look to get the best bang for their buck. So that being said, what we do is we look at what the commercials are doing, and we look at the changes. These are the only two things we care about: commercials, changes. And long and short simply means buy and sell. And we want to focus on where they're putting more emphasis in regards to where they're buying more. So in some cases, they buy more on the long side. Some cases, they buy more on the short side. Regardless of whatever it is, we just focus on where they have the most ideal positions. Right now, we do not care about them being almost equally invested, but what we care about is the changes over time, because we're looking at that short-term change to make kind of a short-term or intermediate returns. And sometimes, which I will show you why, we look to make a long-term return. It helps us solidify our entry. So that being said, the first we see here is New Zealand dollars. So we put NZD down there. Goes for long. We'll put that in caps. Goes for the long. And because we have that, it's not that much. I would just put a star next to it, because it's not a big size, just a little bit of movement. And the next thing I want to look at is the USD. USD normally don't even put big moves like this, so this is major. So USD is going short, right? Put that there. And you might be looking, how does this help me understand the market, or how am I going to trade better with this? Bear with me. GBP long, and I'm just gonna start that position isn't that big as well. Below 1,000 is low, and normally for GBP, normally have a bigger size. So what we look at is that they're going long in that position. And next thing is JPY. JPY got a decent amount of position there. JPY, we go that for long. Now, on its own, if you trade these assets on their own, like this, looking at what you got from the COT report, knowing that this is most likely going to be bullish, this is going to be bearish, bullish, you can decide to make your biases by that. But I don't like to do that. I like to stack up the odds in my favor, just like, what's that movie called? Hunger Games. Yeah. May the odds be in your favor. So I tend to do that. May the odds be in your favor. So I tend to do that by using the next tool called seasonality. Now, seasonality is just the season. Basically, that's what it is. In the UK, we have 4 seasons: winter, summer, autumn, and spring, not in specific orders. But, the market also has its Q1, Q2, Q3, Q4. And what we tend to do is we look at the season which the asset is at, and then we trade based on that season. Now, because I've seen USD actually has a very massive amount of position, and JPY I just focus on those ones for now. Now, the other assets that I've looked into, that might have a different biases on COT report, those are just the ones I've selected for now. I'm trying to keep this webinar as short as possible. So let's look at, now we're on the 4th, right, of 06. And what we can see is they normally sell USD around this period, around the 1st, right? We're expecting USD to already dump from the 1st. Now, we catching up somewhere on the 4th. Is already dumped already, and we're just literally trying to catch up to the remnant or whatever is left from that dump. So we're currently right here. So what we can see, we have 1, 2, 3 days, possibly 3 days to go short, and then everything start looking like it's going to go back up after that period of time, which is here, we should prepare more for the long move. So if we see the COT report for next week, or the one that comes out on Tuesday, and it's looking long, then you might just want to exit your position on, Wednesday, for example, and start looking to buy, that way, based on we already knowing that seasonality is looking like it's going to go bullish from this period of time. Now, I only like to take trades that have more than 3 days, Now, this one on the 4th right here, it's going to just give me roughly about 3 days, 5th, 6th, 7th, just about 3 days. So it might be able to match my strategy at the moment, but it comes with a risk. So we expect that to go short for a little period of time, which is from here to here, but immediately after kick back up. So far the COT report changed in that favor, then that's good for us. Now the next tool to look at is probability. Now we can put this, so I can put seasonality USD long. So what we can now do, no, it's not long, it's short. My bad, but the long-term bias is short, long, and then long from 7th. So which means short to 7th. So between now and 7th, that's what I want to do. Short, and then we can then do this long from that after. So we know that that's your exit. Worst case scenario, you want to exit on the 7th or the 6th, whichever. So let's look at probability. Now for probability, we need to look at all the assets that correlated in USD. Now you're going to be like, yay, now it's making sense, because now I'm looking at them in pair format rather than what I was looking at them before, which was not the pair format, which was the individual format, futures format. So what we're going to do is going to pull that out. That I'm going to check every single pair that I have on probability with USD. I'm going to cross-refer all the USD that I have. I mean, try Turkish. I don't know. Turkish lira, I don't think anybody trades that at the moment. I mean, my broker doesn't even allow to trade that because of the crisis. So we're going to leave that out of the pack. Hearts are still with people, that lost a lot of loved ones this year on the earthquake. So God be with them. Now, going back to this on the 4th, right? This is what we're looking at. We're looking at USD going short. So we're looking at, here we go, 4th, right here. Just looking at the wrong date. We want USD to go short. Now, what we see here is the USD CHF, and on that day, which is tomorrow, for example, we're expecting to go short all the way till here. I like it to give me 3 days, because if first they fail, likelihood of second day flopping is low, third day is lower. And if you set your stop loss and your take profit according to ATR ratio, which is in previous webinars that I've done, I never really segmented them like that, but for the internal guys, the guys that actually have membership, they can actually see the ATR video right here. It's straightforward. I have that internally. But for the guys watching on YouTube, there isn't any segmentation. So you have to actually pick through the bits of my previous webinars that I've done and see how I apply the ATR too. And also in this session, you actually have to do your technical analysis yourself as well. But in the meantime, if you haven't yet subscribed to the channel, please make sure you subscribe, you like the video, and give a thumbs up. Leave your comments. I'm always open to ideas and comments. So let's go back to the trade. Now, what we see is USD CHF. We don't have that short that we're looking for. We need 3 days short. We already have short on Tuesday at 64%. So take that out. If you want to understand how the probability works, basically we design it internally. We can't give away trade secrets, but we have probability for the entire year. So every year we do the probability for the entire year, which is the next year after that. And it's pretty accurate, to its own measure. That's why I use 3 of them, because at least this will pump you up certain percentages at every time. Let's say you're using this with a 60% success rate. By the time you add seasonality, you're at 75. By the time you add probability, you'd be like, 92, 93%. You can't be 100%. I don't know. If someone has 100%, let them show me. But there's days in the probability right here that do have 100% win days, and some of them have been performing very well on those 100% days. Most of the time they pop in anyway, but the 100% does come with a risk. So going back to this doesn't really look like what we're looking for. We're expecting it to go short. So it's giving us similar patterns as the USD CHF. So we'll let USD JPY go. Next thing we'll look at is here, Euro USD, because Euro comes first. Now we're expecting Euro to be stronger than USD, but what we can see here, it doesn't look that way. So we're gonna exit that USD CAD. Let's see what we have. USD CAD, we're expecting USD to lose strength, but it doesn't look like it's losing strength. So we let that go. And you might be wondering why we don't have any trades. Sometimes you don't have the full alignment. And when you don't, just let it be. When you do, follow the alignment. So what we can see now is GBP. GBP actually plays that out for those 3 days straight, exactly how we want it. 3 days straight. So we get probability of GBP, USD, long, 4th till 7th. Now, you might wonder, how do we go from short USD trade to a long GBP USD? Because GBP goes in front of the USD. Therefore, if USD is going short, GBP has to go long. So that's what's happening right here. Long 4th to 7th. All right. Now a 55% chance of win on the 4th, 63 on 6th, 59 on the 7th. And I know some of you might be thinking, why don't we just scrap the entire COT and the entire seasonality and just focus on this percentages right here? You know, let's just trade on 55% days and all that. It doesn't work that way. You have to combine all three to have the full juice of the strategy itself. So next thing is AUD USD. And let's see, AUD USD also gives us that right here. We got that 3 days right there. So next one is USD long. Same thing, no difference. And the last one is NZD USD. But I get, you know, you got the gist. It's the same thing over and over again. So if you need the tool, guys, you can always access it from business.dareempire.co.uk/pricing. So all you need to do is the website /pricing, or if you go to the website itself, business.dareempire.co.uk, you'll see it there. There's also a link in the description. And to get the tools, there's different type of tools or different type of membership that gives you different access to different type of tools you're going to use out there that you're going to use from our website to make your trade out there. So you can check that out and, you know, get that if you want to. So there's no need of me analyzing more of this trade because I'm trying to keep these sessions as short as possible. There is opportunities for the GBP, for the JPY, for the NZD as well. But for this one, just by looking at the USD alone, we've seen two. I don't know if NZD USD might be a trade as well. I mean, we can check that some other time. But for this two, I believe this two is more than enough. So use your technical analysis, use your ATR ratio, use your entry strategies that you've learned from the past 4 or 5 years we've been together. And if you're new to the channel, watch some of our previous video to get that, or you can actually subscribe to the membership and then use that subscription to watch those videos, which are specifically directed at the entry strategies, the ATR, and every other thing that you need to know about the way I approach the market. So thank you very much, guys, for joining, and I'll catch you in the next one. Happy trading.